We got a lot to catch up on. My internet went down earlier today during the live stream right when Powell was about to come live, and so we missed all that. I'll do some catch up now, and let's go ahead and talk about Tesla some more. What's going on with bonds? What's happening with the US dollar? What major company just did a bunch of layoffs? And are we going to get this Santa rally, or is the market going to be a big Scrooge? Washington Post has lost 500K subscribers in the past year and has announced layoffs are coming to the paper. Oh my. The same paper that was criticizing Elon for laying off some of the employees at Twitter after saying, hey, you can stay if you're willing to work hard, or you could take 3 months of paid leave. I mean, just think about all the other publications that were criticizing Elon when that happened, whether it was the New York Times or the Guardian. And I'm not saying this to just give more praise to Elon. Oh, he's the savior. It's the greatest thing ever. I'm just pointing out the hypocrisy of these major papers. Many of their workforce would have left instantly if they were given a similar offer. And they know that. These people don't do hard work anyways. The level of reporting that these companies have done has been atrocious. Of course, you've lost 500 subscribers. And other news, America's #1 Karen, Elizabeth Warren, is going to try to put forth some new rules and regulations when it comes to crypto with the goal of cracking down on money laundering. Now, obviously, since they haven't been able to even crack down on money laundering when it comes to US dollars, I doubt that any of this will actually be successful whatsoever. And even more than that, this story might grab your attention. It might seem like a big deal, but it's very unlikely that this actually gets passed, and we'll likely need the new Congress to sit down, maybe sometime next year, before there's a real serious bill that we'll have to go through and deep dive into to see what changes they're actually going to make. But as of now, this to me seems like a nothing burger, and a lot of the changes do seem actually pretty sensible. And since we're talking about crypto, we might as well cover this, although you've likely already heard about it. Sam Bankman-Fried has been finally arrested. Not very surprising that it took this long. They tend to move slow on white-collar crimes such as this, but he could face up to 115 years in prison if he is convicted. However, that's not what I'm most interested in. I want to know where all this money actually went. I mean, besides taking money to bail out other crypto companies, to give it to other businesses, to give it to his employees, to put it in his own pocket, he was also making major donations to politicians, which he actually says was on both sides of the aisle. And I think it'll be really interesting to see how much of this is actually true or not. It does seem likely to me that this is actually probably the truth, that he was playing both sides at the same time. He said he just didn't want it to be known that he was donating millions to Republicans because reporters would freak out and paint him in a bad light. Makes sense to me. I mean, let's be honest, you could literally pull off historical fraud, be a major dirtbag, but as long as you say all the woke things you need to say, no one will care at all. But of course, this is a deep web that extends far beyond the politicians. The Daily Shot put this great diagram together that shows really how far the web of influence that Sam Bankman-Fried had. Of course, if you want to sign up for the Daily Shot, go visit their website. It's a $100 subscription. Of course, we have permission to also share all this content in the Discord as well with our members. And now let's talk about something that just happened in energy. U.S. Energy Secretary extended an olive branch to the oil and gas industry, telling executives that she recognizes fossil fuels will be around for a long time. What an olive branch. Wow. I imagine how that went. Well, we all know how awful and evil all oil and gas companies are, but since my voters are mad that they can't all afford Teslas and have to put gas in their vehicle, I guess I'll admit that you're probably going to be around here for a while. So here's an olive branch. It's half burnt because I tried to use it to keep the power going in my house. It turns out you can't do that because the solar panels go out when the sun goes down. I don't know how any of this works, and I just don't like you guys. You win, okay? You win. To be fair, it might not have gone down like that. She might have actually opened a book. And now let's talk about the market. We're pretty much in no man's land. And the premiums were wild today for options trading. I tried to go for a small play, then my internet went out, and that totally ran against me, which sucks. So also gave me some trouble on the small account, so we took a big loss there actually. That's sad to say, but it happens. If you want to go back to the live stream that I had earlier this day, I started off the live stream with talking about how to handle losses, what you should and shouldn't do. So if you want to hear about that, make sure you go check out the beginning of that live stream. And there's a bunch of reasons why those positions went so far against me. And I'm not going to go into a big explanation. I already did that in the live stream. So if you want to hear about it over there, but what I do want to point out is what I have here is the open positions. We just have the TLT position. Remember, the goal of a small account is to stay nimble. So I closed some of the other positions that we had, just left what was a winner, TLT. Obviously, the premiums were really wild today, so they got killed a little bit as well. I actually bought more into that because it was my winner. And I'll give this some time to play out. And remember to keep at least 50% cash so that we can react to the market. And remember, I'll also be posting some of the clips from the other trades that were made. I've been keeping Discord members uploaded. I've still been recording all those. I will still do those videos that we did last time with some minor changes after hearing some feedback from people. They thought the videos could have been organized a little bit better, so it's a little bit easier on the viewer to see like what's happening percentage-wise with the play while the market's moving. So I've played around with widgets, so it should be a lot easier on the eyes and easier to follow with what I'm doing in the future videos as well. So we're still doing that series. I still think we can go to 10K. I'm not that worried about what happened. It sucks. It definitely sucks. Losing money always sucks. But I've been doing this long enough. It's not going to destroy my mental. I'm not going to give up just because, you know, we had one or two really bad trades. They were really bad trades, but I'm not going to capitulate just because of that. And now back to what's going on in the market, what we're looking at right now. In the last week, we talked about, hey, potential selling rally, and I'm still there. I still think this could go either way. I got really worried on some short-term positions when we saw this break below 380, but we had that quick bounce back, market built back up. During this time period, I am dealing with major internet issues. I was not giving any feedback. In fact, I had to go back and rewatch the Q&A with Jerome Powell, so I missed a lot of that. Although one of the first things I did check after he talked, and one of the things that you could be doing on your own as well whenever you hear Jerome Powell talking, is keep an eye on the bond market. Does the bond market believe what Powell's saying? And one of the things that we could see here is clearly it didn't budge. Powell said he wasn't going to do any rate cuts in 2023. Bonds climbs. So obviously there's still some expectation that the Fed's likely going to have to cut next year. I don't think the market's buying his nonsense anymore. And I think, you know, they're kind of off base. Now they're trying to say whatever they can to keep the markets calm. They don't want to crash the economy. But inflation, they got a small win because inflation came down. But we're going to stick to it. We're not going to have any rate cuts. Everything's going to be fine. There's not going to be much more job loss. There's not going to be a recession. There's no need to panic. Make sure you vote the politicians who elected me back into office next year. You know, it's more of that. But when it comes to SPY, what we're looking for is a meaningful break in either direction. We need to either break below this 398 and actually stay there, or we need to actually make a meaningful move above this 200-day moving average and actually stay above that. But as long as we're in this, you know, tight top range, it's hard to say which way this market could go. That said, it's likely that a lot of hedge fund managers and a lot of the ones that I've been talking to are still fully invested in this market and think that a rally could come around. And I am finding it very hard to actually argue with that. It doesn't make any sense with what's going on fundamentally in the markets, other than these people have all this money on the side. They've already got all these tax losses they've taken from a rough market all year long. They're going to have some rebalancing that goes on at the beginning of next year. So why not get in before that rebalancing occurs, enjoy the Santa rally, and then reevaluate what's going to happen next year? I think this rally could put a lot of people through a conundrum where they're like, why is this melting up? It doesn't make any sense. Everyone's so confused about what's going on, but it's going up anyways. And let's talk about what isn't going up, and that's Tesla, still hanging out in oversold territory. It tried its hardest to get a few rallies, tried to move with the market, but this has continued to be an underperformer. And this was one of the trades that burned me, in fact. I had actually set that trade up with a few other traders as well, which is why I had such high confidence going into it. We all got burned. Bad timing and bad entry, but I still hold the stock that I bought, and I'm just kind of thinking about buying more at this point. The catalyst still hasn't hit that we're expecting, which is Elon to say, hey, I'm not going to give up my baby, which is Tesla, for Twitter, which I didn't even really want to buy, but I was forced to buy. You know, why would he give up Tesla for Twitter? I mean, it doesn't make any sense. The narrative that seems to have overtaken the market, I'm not buying it. And when people talk about how negative it is and how he's going to have to sell more stock and it's going to cause this massive frenzy out of Tesla, I don't buy that either. So honestly, I'm still fairly confident in this. I'm not all in on this position, and I do want to look at some options as well and try to make another attempt at this trade, because I still think that even though we had a bad and rough entry, took some losses here, that there's still potential for this to play out. I'm not taking any positions yet. I'm going to need this to actually be one of those, the stars have aligned moments for me to go ahead and enter back in this position. But overall, I still have a more bullish sentiment here. When everyone's really negative on this, that's when I usually am the most bullish. I'm not really someone who just tries to play the opposite of what everyone thinks usually, but this is one of those moments where I'm like, I'm not sure if all this negativity is actually justified to the extent that we're seeing it on the stock. Now let's talk about another company that I haven't talked about in a while, Roblox, RBLX. This has been entering in my radar lately, and I have to say, this is starting to build a bullish case for me. We can see on the daily, we're getting close to above a 50 RSI here. And we're also seeing that we're hitting on the TTM squeeze. I think another bullish rise right here could be a chaseable move. We'll want to see it get above that 200-day moving average. And I think if the market rallies, this could be another one that is a favorite of mine. And of course, I just want to take a moment and say, hey, in the Discord, we also ping some other companies that are doing really well. Remember, I don't talk about every company that's covered in the Discord here on the weekly reports. I only touch on the highlights, what people request me to talk about in the videos. So remember, hop in the Discord if you really want the full scope of what's being discussed, or if you want to bring a topic to discussion and ask my opinion on something or see what the other traders are looking at, you can always use it for that as well. Now let's talk about Bitcoin. Post-Powell, Bitcoin's in a massive sell-off. We can see that it's getting really oversold right now as I'm doing this video. On the 4-hour though, we're still pretty bullish here, and it's starting to look more and more like, hey, that news that FTX collapsed, all that fear, all those people that were selling, that looks like it was at least at a minimum a short-term bottom. And right now, this looks like an amazing time to speculate. Now, I don't have any grand expectations for where it's headed at the moment, but it looks like there's some money to be made here. And I think the time to be afraid in the short term has passed. If we also take a look at natural gas real quick, we can see we're in a tight chop range. I want to see a meaningful breakout to the upside or downside for here before we set up some more plays. We're making a lot of money on UNG. I think we're on a massive win streak when it comes to trading UNG right now. I think like 10 out of 10 for UNG trades. It's been a lot of big wins there. People have been sharing some of their wins here as well. Super happy to see that. On XLE, I want to get bullish again on XLE. We recently took out a trade. I think I exited on the small account during this rally, and then I closed the rest of my position in the larger account as well. Up here, I even sold some shares as well. I just can't, this looks like another chop range to me. And especially when I'm considering that there still could be easily a rally in the S&P and also in the technology stocks, I kind of want to give XLE a break because I could see some money leaving this and wanting to chase those really oversold tech stocks like Tesla. And we'll go ahead and finish the report and talk about Coinbase for a moment. One of the things that I noticed in Coinbase's 10Q that I hadn't noticed before was the fact that you don't own the funds that are in Coinbase. Now, this is a common practice within the crypto universe. However, for major brokerages, especially those that are actually listed on indexes and are tradable, this is not a common practice at all. So it kind of caught me off guard. Now, this is something that I should have realized sooner. I guess I didn't look into it because I actually do keep my crypto in a wallet of my own. So I actually own that crypto. But I don't know if I've ever explicitly said on a report or some other format that, hey, you should be keeping your crypto in a wallet. I think I did way long ago, maybe months ago now, in the classes that we did. But I just wanted to reiterate it because I saw there was a lot of fear about capitulation or about people losing their funds with FTX. You know, the way to avoid all of that is to actually keep your money in a wallet. Now, if you're confused about me saying, hey, you don't actually own your crypto, it's not in a wallet, what happens with these companies and what could happen with Coinbase, I don't expect, but it could happen, is if this company actually goes bankrupt, your money that's in the cryptos investments is going to be used to cover the company's debts. So if they owe a bunch of money, they have to cover some bankruptcies, they didn't manage things appropriately, that money is going to be used to pay their debts. That money is not going to be given back to you. Now, this doesn't mean that I think Coinbase is doomed or that this is any new information. This was just a refresher for me as I was going through my research there, revisiting the 10Q, and it made me start to really challenge my conceptions on like, okay, are institutions really about to get into this? It doesn't look like it. The stock's performance has been extremely poor, especially as Bitcoin continues to look more and more bullish. I'm not liking it right now. I'm not liking the movement that I'm getting. It makes me more interested in something like the Grayscale fund because, you know, there we have a more clear catalyst, right? The catalyst over there is if this just gets switched to a trust, to an ETF, boom, 40 to 60% like that. Of course, the timing over there is also a lot harder. So I think long term, I still love this name. I don't think that they are at risk of bankruptcy. Of course, it's going to be worrisome that people aren't going to be incentivized to keep their money with them. It's also going to be worrisome that it's hard to drive more fees, right? Because fee prices only go down. So there are some revenue issues there. And I think right now, just kind of got to give this stock a break, so especially when it comes to trading. As a long-term hold and investment, I still own it. I still like owning it. But for trading, I'm giving this one a breather, especially after the poor performance as of late. Now, if this starts to pick up exceptionally, Bitcoin starts to move, we actually start to see more correlation between coin and Bitcoin, then it will definitely catch my attention. It's definitely on my watch list. Above 50, this stock will once again have my attention, and I'll be looking at it as a trade opportunity. And that's it for this report. Hope you enjoyed. Sorry about the issues with the live stream earlier today, but I will see you tomorrow and next week for another weekly report.